You were right over the past few years of Keiser Report, where you said that the Fed is causing deflation through all of their money printing and their negative interest rates, ever driving interest rates down. The headline reads, "The rich get richer and rates go lower." Maybe it's not about demographics after all. So this is a Financial Times piece, and it's looking at a recent report that I guess came out the same week as Jackson Hole, the virtual Jackson Hole. And what they find is that the argument used in the mainstream media normally is that this wealth gap is caused by the boomers, right? That they have all the wealth. But what in fact the data shows from the Fed's own data is that it's actually just the very, very wealthiest, even higher than the top 1%, are gathering all the gains from the past 20, 30, 40 years of growth.
Yeah, that's right. The top 1/10 of 1% are capturing almost all the gains, and that trend accelerating over the past 20 or 30 years. And the nomenclature used that the Fed is fighting deflation by money printing, as we've been saying now for a long time, is actually the exact opposite. They're causing deflation. So in this case, to understand what deflation means in this context, it would be societal collapse, because when you allow for the top 1/10 of 1% to simply move trillions from the public economy, the publicly owned economy, into their private pockets, you are fostering societal collapse, and that is for sure deflationary. When a society collapses, you can definitely call that deflation.
Well, even before it collapses, what happens is what the data shows is that as manufacturing was sent overseas and wealth creation, normal wealth creation for ordinary people was sent overseas, all you had were rackets, right? And Ponzi schemes available here. So whoever had the Cantillon effect, whoever was closest to the Fed got the cheapest money. Whoever already had the huge assets when the Ponzi scheme started, I believe in August 15th, 1971, when whoever had that got to gain the most of all the money printing, all the credit pushed into the economy, whereby the bottom didn't. And they do ask, and they look at the point that why didn't all of the savings, so all the vast savings, the savings glut is actually with the top 0.1% of the population. They have massive amounts of wealth. Jeff Bezos has $200 billion. His ex-wife has like 65, 75 billion. She can't give it away fast enough, right? For the most part, those people are not investing into productive assets in this economy because obviously we don't have that. Like China produces everything, right? So that means that they're the biggest debt holders. All the muni bonds, treasury bonds, all that sort of stuff. They own all of that. So the governments and the bottom 99% owe the top 0.1% all this money. And they're paying more and more of their income to them. And they're gaining more, buying more assets, but also that capital that's going from the bottom to them is obviously a sucking sound, causing deflation for the vast majority, not for that top 0.1%, which is enjoying a very high inflation rate in their assets.
Right. The way the U.S. government is funded is through the issuance of treasury bonds. And they pay the interest on those bonds by collecting taxes. Who owns most of those bonds, if not virtually all those bonds? The top 1/10 of 1%. So the government simply becomes a pass-through mechanism for people to pay money from their pockets through something called taxes that are just a fig leaf that hides the transmission mechanism of your money through the government into those who own these bonds. And because they own so many of these bonds, the interest rates available are quite low for them to go out and borrow and to speculate. And oh, guess what? Whenever they make a mistake speculating, they get bailed out again and again and again. So it's deflationary in the sense that society in America is collapsing. We haven't seen a society collapse on this scale since the Soviet Union collapsed. And this is exactly what we're seeing in America right now.
Right. And the inevitable doom loop. And maybe this is just something that has to happen throughout history, why we have blank slates, why a new leader or a new government or regime has to wipe away all those old debts, because it gets to this point of a doom loop. And the doom loop, they point out that, and the names of these, the researchers are Mian Straub and Sufi, who they released this paper that argued that it's not demographics, but it's actually the rich getting richer that is causing all of this chaos. They disagree about why there are ever more savings sloshing around. It is not because the huge baby boom generation is getting older and saving more, a trend that will change direction soon anyway when they all retire. Rather, it's because a larger and larger slice of national income is going to the top decile of earners. Because a person can only consume so much, the wealthy few tend to save much of this income rather than spend it. This pushes rates down directly when those savings are invested, driving asset prices up and yields down, and indirectly by sapping aggregate demand. So there's the deflation they're causing. Now, the consequent deflationary economy for the vast majority leads them all into debt, whether it's credit card debt, mortgage debt, student debt, housing debt. All that stuff is owned by that top 1%. And remember, as you've pointed out as well, they get all of that reward, but get none of the risk of that deflationary economy for the 99%. When those debts collapse, they just take the pile of contracts and go, here, Fed, put it on your balance sheet. So that's why it's gotten even worse. That's why it's like going parabolic at the moment.
Right. And as Dr. Michael Hudson points out in his many books, the U.S. went through a transition from a manufacturing base economy to pure financialization, right? And I witnessed it firsthand starting in the 1980s under the Reagan-Thatcher deregulatory boom. And so now we have a rentier economy. It's 99% of the U.S. economy is the top 1/10 of 1%. Charging interest on everything. If you notice, just about everything out there now, the prices are going up because the rentier economy feels that they're in an oligarchic position. There's no pushback by regulators, and there's no manufacturing competition. There's nobody competing with anybody in the financial markets. It's all been turned into a very small oligarchy, and we have oligarchs. We have the same thing again. You go back to the Soviet Union. America has an oligarchy problem. There's too many oligarchs, not enough actual productive jobs.
Well, oligarchs tend to arise out of like the commodities business. So you're blessed with this huge abundance of gold or oil or any commodity that just is there to be taken. There's no wealth creation needed. Like you don't need to be super sophisticated and invent a great technology or anything. You just take it out of the ground and sell it, right? That's what we have in the United States is there's no amazing technology beyond the printing press, which was invented very long ago. It's not something new, and it doesn't add any productivity or GDP growth for real GDP growth to the economy. And in terms of like where this goes, the societal sort of breakdown, I mean, you do see it. Max and I are starting to see it where everybody is, on one hand, it's like maybe an Atlas Shrugged sort of thing. It's like, well, there's no getting ahead. There is no meritocracy. And I'm not going to ever be friends with the New York Fed. I'm not going to be friends with John Williams. He's not going to give me free money. So I might as well just stay at home, eat bonbons, and watch Keiser Report. Like there's a sort of sense of that, and you see it at all the retail jobs in the retail sector. If you have to go to the supermarket, if you have to use the pharmacy, you'll notice that there are no workers there, and it's total chaos and ramshackle supplies, empty shelves, all that stuff like you talk about what happened at the end of the Soviet Union. And on the other hand, it's kind of what, you have the national problem of this wealth gap, but also international. So Americans and some of the Western economies are able to just stay home, not locked down, and get paid more, but somebody's paying for it somewhere. Like the gap between us and what they can do in Latin America or parts of Asia or Africa is that's also starting to break apart.
Right, and you have to remember, of course, that the money printing is causing inflation to rise a lot faster.
Yeah.
The purchasing power is falling apart faster than people are getting transfer payments from the government. Now, if you're Hank Paulson or John Paulson or any one of these hedge fund managers out there, you can insulate yourself and profit by this unfortunate circumstance where the financiers are captured the rest of the economy. But for the vast majority of folks out there, they simply take the brunt of it. They simply have a quality of life adjustment down, and they're getting angrier and angrier. And one would understand why Americans are getting angry, because they're going from a meritocracy to neo-feudalism, right? Or as Gerald Celente calls it, the Slavelandia.
Slavelandia. Well, yeah, it happened. It's too late, and they're only just beginning to notice it. And that's what the FT opinion piece concludes with, that they say that, a further note, I think if these Mian, Straub, and Sufi are right, the political implications are particularly nasty. Inequality, in their view, is self-perpetuating, with a feedback loop running through low rates. Excess savings of the rich depress rates, low rates push asset prices up, the rich get richer still. Many governments, however, are engaging in monetary policies that in all likelihood make the flywheel turn faster.
Right, so what we're gonna have in the US starting right now is class war. And we've lived in Europe, we lived in the UK. You know, the UK is mired in class war, you know, and that's unmistakable. And it's pernicious and it's ugly.
And look at what they say on the news, the cable news. They're part of the top 1%, obviously. Rachel Maddow, for example, is making $30 million a year for one show a week, right? So that puts you in the top 1%. What they keep on saying is the Fed needs to keep printing to help the poor, to help the poor, to help the poor. We're just doing it for you. It hurts us more than it hurts you. So that's the propaganda to continue this policy that the data shows is causing the strike.